In 2021, Cape Coral was the hottest ticket in Florida. Mortgage rates at historic lows, over 300,000 newcomers flooding in, and home prices rocketing 75% in 2 years. But now, the governor is in crisis mode as the Cape Coral housing market implodes. Median values plunging, listings tripling, and thousands of families suddenly underwater. With desperate policy moves, foreclosures rising, and the exodus accelerating, the dream has become a statewide nightmare. What triggered this unraveling? Could anyone have stopped it? And just how far will the fallout reach next? Cheap money was the spark that set Cape Coral's housing market ablaze. By early 2021, the 30-year fixed mortgage rate had slipped below 3% for the first time in a modern memory. For young families and first-time buyers, this wasn't just a number, it was an open door. Suddenly, couples who once struggled to scrape together a down payment found pre-approval letters arriving in days, sometimes hours. Credit standards relaxed, and lenders, eager to ride the wave, processed applications at a pace not seen since the run-up to the last crash. In kitchen table conversations and real estate offices, the math felt irresistible. A $350,000 home, once out of reach, now came with a monthly payment that looked almost manageable. Some buyers drove down from Ohio or Illinois, paperwork in hand, ready to lock in rates before the window closed. Others, working from laptops in rented condos, scrolled listings late into the night, convinced that waiting even a week could mean paying tens of thousands more. The city's brokers and loan officers worked overtime. Mortgage approvals in Lee County soared to their highest level in more than a decade. Local banks reported a surge in first-time buyers, many under 40, eager to trade apartment leases for backyard pools and two-car garages. The old guard, retirees and snowbirds, suddenly found themselves outbid by families and remote workers, willing to stretch every dollar. Open houses became scenes of quiet competition. Agents fielded calls from out-of-state buyers, some offering to skip inspections or wire earnest money before ever setting foot in Cape Coral. It was a market where speed trumped caution, and each new sale seemed to set a record for price per square foot. The sense of urgency was everywhere. Social media feeds filled with stories of neighbors cashing out, friends landing homes with zero contingencies, and bidding wars that ended in minutes. Builders, sensing opportunity, ramped up production, pouring foundations on canal lots that had sat vacant since the last downturn. For a brief moment, it felt like the rules had changed. Cheap credit, easy approvals, and a belief in endless appreciation fueled a buying spree that left even seasoned agents shaking their heads. In Cape Coral, the dream of homeownership wasn't just alive. It was turbocharged by the lowest borrowing costs in a generation. By the end of 2021, Cape Coral was in the middle of a transformation that few cities ever experience. The city's population swelled as more than 314,000 people flocked to Florida that year, with Cape Coral among the most popular destinations. New arrivals streamed in from every direction, retirees rolling down I-75 with moving vans, families unloading minivans in the driveway, and remote workers eager to swap city skylines for palm trees and canal views. Builders scrambled to keep up. Permit applications poured into City Hall at a pace not seen since the mid-2000s. Entire neighborhoods seemed to spring up overnight. Canal front lots that had sat empty for years were suddenly marked with stakes and survey flags, then ringed with fresh concrete and the hum of generators. National home builders like D.R. Horton and Lennar raced against local crews, breaking ground on subdivisions east of Del Prado and along Pine Island Road. A sense of urgency fueled the construction boom. Developers held meetings at dawn, anxious to beat supply chain delays and rising lumber prices. Crews worked weekends and poured foundations under floodlights. In some weeks, Cape Coral issued more new home permits than Miami, a city 5 times its size. Local hardware stores ran short on drywall and roof trusses. Even the city's permitting office extended its hours to process the flood of applications. The city's landscape changed block by block. Rows of for sale signs lined brand new streets. Trucks carrying sod and palm trees became a daily sight. transforming raw sandlots into manicured lawns almost overnight. New schools opened their doors and shopping plazas filled with out-of-state license plates. For many, it felt like a gold rush. Contractors hired extra crews, real estate agents worked 7-day weeks, and longtime residents watched as the skyline filled with cranes. Canal dredging projects expanded, adding miles of waterfront to meet buyer demand. Optimism was everywhere. Coffee shops buzzed with talk of quick flips and record appraisals. Local officials touted Cape Coral's growth as proof of Florida's enduring appeal. But as subdivisions pushed further into the wetlands and the backlog of new homes grew, a quieter question began to surface. How long could this pace last? For now, the answer seemed simple. There was always another buyer, another foundation to pour, another moving van pulling into town. By the spring of 2022, Cape Coral's real estate market had taken on a life of its own. The median home price hit $441,000, up 75% in just 2 years. For buyers, the old rules no longer applied. Open houses turned into battlegrounds. Lineups snaked down sidewalks, and agents juggled a dozen offers before lunch. Out-of-state cash buyers, many from New York, Illinois, and California, swept in with bids tens of thousands above asking. Their offers arrived sight unseen, often accompanied by letters pledging to waive inspections, appraisals, and even the right to back out if the roof leaked or the foundation cracked. Stories spread of homes selling in under an hour. One agent recalled a canal front property listed at $400,000 that closed for nearly $500,000 after a bidding war between 3 remote workers dialing in from different time zones. Another house sold in less than 30 minutes, the buyer wiring a non-refundable deposit from an airport lounge. For families relocating from the Midwest, the pressure was relentless. Some offered to pay sellers' moving costs or cover the difference if the appraisal fell short. In this market, hesitation meant losing out, and every day off the fence added another $5,000 or $10,000 to the price tag. Sellers seized their moment. Homeowners who had never considered moving suddenly found themselves fielding unsolicited offers. Handwritten notes tucked under doormats, realtors cold calling at dinner, and online flurries promising quick, above-ask closings. The local MLS overflowed with stories of buyers skipping every safeguard. No contingencies, no repairs, no questions asked. Mortgage brokers reported that nearly half of all loans locked in rates under 3%, making the monthly payments on a $400,000 house feel almost reasonable, even as sticker shock set in. For winning bidders, the mood was euphoric. Social media feeds filled with selfies in front of freshly sold signs, hashtags like #FloridaDreamHome, and stories of beating out a dozen rivals. Coffee shop chatter revolved around record gains and overnight equity. Even seasoned agents admitted they'd never seen anything like it. A market where the only limit was how fast you could sign and how high you dared to bid. Builders, flush with deposits, doubled down on new subdivisions and canal projects, convinced that demand would outpace supply for years to come. But beneath the celebration, the frenzy carried its own risks. Appraisers struggled to justify skyrocketing sale prices, and some lenders quietly began raising red flags. For now, though, the mood on the ground was pure adrenaline. In Cape Coral, 2022 was less a housing market than a high-stakes game, and for those who played to win, the rewards felt limitless. By the fall of 2022, the mood in Cape Coral's real estate offices had shifted from celebration to quiet calculation. National analysts began to sound alarms, ranking Cape Coral among the most overvalued housing markets in America. The numbers told a story that no one wanted to hear. Sale prices were now running far ahead of what appraisers could justify. Contracts that had sailed through just months earlier started to buckle under scrutiny. Each week brought a new round of deals falling apart at the finish line, as lenders balked and buyers faced the cold math of a loan amount higher than the home's appraised value. On the ground at Datsutama, Agents who had weathered previous cycles started to voice concern behind closed doors. They traded stories of back-to-back contracts collapsing, of sellers forced to relist homes that had already been packed up and cleaned out. Veteran brokers, some with memories of the 2008 crash still fresh, urged caution in morning meetings. They watched appraisal reports come in tens of thousands below contract price, forcing frantic renegotiations or outright cancellations. A new phrase entered local jargon: zombie contracts, for the agreements that shuffled on, neither alive nor dead, as buyers and sellers waited for a miracle that rarely arrived. Institutional investors, once the market's quiet giants, began to hedge their bets. Internal risk models flagged Cape Coral's price-to-rent ratios as unsustainable. Blackstone, Invitation Homes, and other major buyers quietly paused new acquisitions, citing market instability and the widening gap between what homes were selling for and what they were worth on paper. In brokerage circles, rumors spread of entire portfolios put on hold, and some agents found their biggest clients had simply stopped returning calls. The public face of the market, though, clung to optimism. Marketing flyers still boasted of record prices, and for sale signs promised instant equity and once-in-a-lifetime opportunities. But in private, the tone was more cautious. Agents whispered about deals that never closed, and buyers who disappeared after a single disappointing appraisal. Some sellers, convinced their homes were worth every penny of last spring's peak, refused to budge on price, only to see their listings linger as new construction continued to pour onto the market. Appraisers, caught in the middle, described a growing sense of unease. Their reports, bound by comparable sales, struggled to keep pace with runaway offers. Each failed appraisal added another layer of doubt, not just for individual buyers, but for the entire market. Mortgage officers started to see a pattern. Monday mornings meant a stack of cancellation notices, each one a deal that had fallen apart over a gap that couldn't be bridged. By the end of the year, the cracks were impossible to ignore. The headlines still celebrated Cape Coral's meteoric rise, but in the back offices and group chats, a new reality was setting in. The city's housing market, once defined by its relentless ascent, now faced questions no one could answer. How many buyers would walk away? How long could sellers hold out? And what would happen when the next wave of listings hit a market already struggling to keep its balance? The first shivers of doubt had arrived, and with them, the early warning signs of a storm gathering on the horizon. Insurance premiums in Cape Coral didn't just rise, they exploded. After Hurricane Ian, the average homeowner's annual bill jumped from $3,500 to well over $10,000 for many canal-front properties. Some families opened renewal notices to find their rates had tripled in a single year. Insurer withdrawals and insolvencies swept through Florida, with at least 5 carriers abandoning the market or shuttering entirely. Those left behind faced a shrinking pool of options, each more expensive than the last. Citizens Property Insurance, the state's insurer of last resort, saw its Lee County enrollment double by 2024, filling the gap but offering little comfort as deductibles soared and coverage shrank. For Maria, a middle-class homeowner who bought during the boom, the math no longer added up. Her wind and flood premiums soared past $14,000, nearly matching her annual mortgage payments. She wasn't alone. In neighborhoods once filled with optimism, conversations turned to sticker shock and panic. Mortgage brokers reported a wave of failed closings as buyers balked at the final numbers. Debt-to-income ratios, once easily met, now tipped over the limits, pushing families out of the market and leaving sellers in limbo. Listing charts told the rest of the story. Inventory, which had been tight just a year before, started to balloon. By early 2024, active listings in Cape Coral had more than tripled from their pandemic lows. Rows of for sale signs lined the main boulevards, with some blocks hosting more empty houses than occupied ones. Open houses that once drew lines down the sidewalk now sat empty for hours. Agents described weekends where not a single prospective buyer crossed the threshold. For every new listing, there seemed to be 2 price cuts. More than half of all homes on the market slashed their asking price, some by $50,000 or more, and often more than once. Analysts like Jason Luris at Parkle Labs sounded alarms in their quarterly reports. In interviews, he pointed to the numbers: a 525% surge in active listings since 2022, showings down by more than half, and an 8% rate of negative equity, higher than anywhere else in the country. The data, he said, showed all the classic signs of a market in freefall: too much supply, too little demand, and a wave of owners desperate to cut their losses. Even the most bullish local agents began to question how long the pain could last. The squeeze extended beyond just buyers and sellers. Landlords struggled to pass soaring insurance costs onto tenants, leading to vacancies and rent reductions. Builders, once racing to pour foundations, now faced a glut of unsold inventory and mounting carrying costs. Some pulled projects off the market entirely, unwilling to accept offers below construction cost. Others pressed on, locked into financing terms that punished delays, hoping for a turnaround that never came. Coffee shop chatter shifted from dreams of easy money to stories of failed closings and ballooning bills. In HOA meetings, the talk was no longer about landscaping or amenities, but about neighbors facing foreclosure and families planning moves out of state. The mood across Cape Coral turned anxious, then grim. The affordability crisis had arrived, and with it, a wave of financial stress that touched nearly every household. The city's housing market, once the hottest in Florida, now stood as a warning for what happens when insurance risk, overbuilding, and economic optimism collide. By March 2024, the mood in Tallahassee was urgent. State officials pored over new data from Lee County, where Cape Coral's housing unraveling had become impossible to ignore. The numbers were blunt. Active listings in the city had soared past 10,000, more than triple the pre-pandemic average. Nearly 8% of homeowners were now underwater on their mortgages, the highest share in the nation. Foreclosure notices, once a rarity, stacked up in county courtrooms. Governor DeSantis convened his housing advisors, insurance regulators, and legislative staff in a closed-door session. The agenda was dominated by Cape Coral, its inventory spike, the wave of price cuts, and the mounting pressure from constituents facing insurance bills that now rivaled their mortgage payments. Insurance executives described a market where annual premiums had doubled, sometimes tripled, since Hurricane Ian. One official cited internal filings showing that Citizens Property Insurance, the state's last resort carrier, had seen its Lee County enrollment more than double in just 2 years. On a whiteboard, staff charted the city's reversal. Median home prices had dropped from $441,000 at the peak to $361,000, erasing 3 years of gains. Over half of all homes on the market had slashed their asking prices, with many sellers forced to accept offers below what it cost to build the house. Lenders reported a spike in failed closings as appraisals lagged and buyers walked away. Builders, once the engine of Cape Coral's boom, now faced unsold inventory and rising carrying costs. The governor listened as policy advisors debated the scope of intervention. Some pushed for broad mortgage relief or insurance subsidies, warning that a hands-off approach could fuel even deeper losses and accelerate outmigration. Others cautioned against sweeping bailouts, pointing to budget constraints and the risk of encouraging speculation. The discussion circled around the limits of state power. How much could Tallahassee do for a city caught between climate risk, insurance turmoil, and the aftershocks of a pandemic-era housing frenzy? Legislative aides flagged the political optics. Public frustration was mounting, with homeowner groups flooding inboxes and town halls demanding action. Social media was awash with stories of families on the brink, unable to sell, unable to afford to stay, watching their equity vanish. The pressure to deliver relief was real, but so were the constraints. Any measure would have to thread the needle between helping struggling residents and avoiding a windfall for investors who had fueled the earlier boom. In the end, the group left the room with more questions than answers. The data made clear that Cape Coral's crisis was now a statewide concern, but the blueprint for meaningful relief remained elusive. The governor's team began drafting proposals, weighing targeted homeowner aid against the realities of a stretched budget and a volatile insurance market. For the residents of Cape Coral, the wait for help would stretch on, as policymakers wrestled with a crisis that had outpaced even their worst-case scenarios. Maria's story begins with a notice taped to her front door. It's not a welcome letter from a neighbor or a flyer for lawn service, just a stark warning from her lender. Payments overdue, foreclosure proceedings imminent. She bought her home in the spring of 2022, at the height of Cape Coral's boom. Back then, the promise was simple: steady appreciation, a backyard for her kids, a foothold in the Florida dream. Now, the numbers on her bank statement tell a different story. Her insurance bill, once manageable, has ballooned to over $14,000 a year. The mortgage payment alone used to feel steep. Now, with insurance and taxes factored in, the monthly total eclipses her take-home pay. Attempts to sell have gone nowhere. 2 contracts fell apart when appraisals landed far below what she owed. Each failed deal left her with mounting bills and less hope. Maria's neighbors are living their own versions of the same struggle. On her street, 4 houses sit vacant, their for sale signs faded by the sun. Some owners have already left, mailing keys back to the bank or packing U-Hauls for North Carolina. The moving trucks aren't just rumor. U-Haul's own data shows Cape Coral as a top outbound market in 2024, with North Carolina and Tennessee the most common destinations for fleeing families. Those who stay behind watch as open houses draw no visitors, and price cuts stack up week after week. Conversations at the local coffee shop have shifted. Where people once swapped renovation tips and boasted about rising values, now the talk is about foreclosure timelines and how to break a lease without penalty. HOA meetings are dominated by questions of who will leave next and what happens if the neighborhood slips into neglect. The numbers from Lee County's court system confirm what residents already feel. Foreclosure filings have more than doubled since 2023, with Cape Coral leading the county. Each filing represents a family's unraveling: missed payments, insurance notices, and a final letter from the bank. For many, the slide into default is less a single event than a slow erosion: a lost job, a medical bill, an insurance premium that jumps overnight. The city's reputation as a magnet for newcomers has flipped. Now, it's a warning for anyone thinking of relocating to Florida. Migration out of Cape Coral is no longer a trickle. Real estate agents in Asheville and Chattanooga report a flood of Florida plates and cash offers from sellers desperate to start over. In those cities, housing markets have tightened, prices have jumped, and local buyers find themselves competing with families carrying the proceeds, however diminished, of a home they could no longer afford to keep. Maria's own plan is uncertain. She weighs the cost of renting against the risk of foreclosure, knowing that either choice means starting over. For now, she scans job boards in other states and wonders how much longer she can hold on. Her story, echoed in thousands of homes across Cape Coral, is the human face of a collapse measured in court filings and outbound moving vans. The city that once promised stability now delivers only questions about what comes next and who will have the means or the luck to answer them. By the summer of 2025, Cape Coral's housing market sits at a statistical low point few imagined possible just 3 years earlier. Market trackers like Reventure Consulting and Parkle Labs place the city's home price forecast score at 25 out of 100, the lowest in the country, and deep into what analysts classify as severely declining territory. For local real estate agents, the numbers are impossible to ignore. More than half of all active listings have cut their prices, often multiple times, and many sit below what it would cost to build the same house today. Median sale prices now hover around $361,000, down 11% from the peak. But the real pain is hidden in the details: a glut of new inventory, shrinking demand, and a growing pool of owners who owe more than their homes are worth. MLS data from April and May show over 12,000 homes on the market in Cape Coral, up more than 5-fold from the start of the boom. Price reductions have become the rule, not the exception. In some neighborhoods, every third house sports a for sale sign, and the only buyers left are bargain hunters waiting for even deeper discounts. Agents describe weeks with no showings, open houses that draw only curious neighbors, and sellers who drop their asking price below the builder's invoice just to attract an offer. The city's once frenzied construction sites are now dotted with unfinished shells, as builders weigh whether to walk away or finish homes they know will sell at a loss. Industry analysts point to a perfect storm of factors behind the collapse. Insurance premiums that have doubled or tripled since Hurricane Ian, a wave of outbound migration, and a mountain of unsold inventory. Nearly 8% of local homeowners are now underwater, the highest share in the nation. For those who bought at the top, every new listing chips away at their equity, turning what was once a nest egg into a source of daily anxiety. Builders and sellers face impossible choices: accept an offer that doesn't cover the cost of construction, try to rent at a loss, or risk foreclosure and walk away. Forecast models, which once predicted endless growth, now flash red. A 25 out of 100 score signals not just a cold market, but one in active retreat. Local agents who once boasted of closing sales in under an hour now spend their days counseling clients through price cuts and hard decisions. The city's reputation has flipped, from a magnet for newcomers to a warning sign for every Sunbelt boomtown chasing runaway growth. Cape Coral's story, written in spreadsheets and court filings, is now a cautionary tale. When supply overwhelms demand, when risk outpaces reward, even the hottest market can freeze overnight. For residents, the question is no longer how high prices will go, but how much further they might fall, and how long it will take to recover. By 2025, Cape Coral's housing market had over 12,000 active listings, a 525% increase in just 3 years, and more than half of those homes saw multiple price cuts. Hard data from Lee County records showed nearly 8% of local homeowners underwater, the highest rate in the nation. Still, the full details of the March 2024 Tallahassee meeting, where Governor DeSantis was presented with the crisis, remain undisclosed. While the state's $1,000 homestead rebate provided some relief, it did little to stop a wave of foreclosures or the sharp rise in outbound migration, as confirmed by U-Haul statistics and court filings. The story of Cape Coral is now a warning to other fast-growing cities. Rapid booms, driven by external demand and cheap credit, can unravel suddenly. The causes are clear, but the long-term consequences for residents and how policymakers will address them are still unfolding.